And you're watching Business Morning live on Channels Television. Great to have you join us this morning. I'm Ladi Williams. Let's kick off the show with some business news. Listed consumer goods giant Flour Mills of Nigeria PLC has reached an agreement to acquire 71.69% stake in its rival Honeywell Flour Mills PLC in a deal worth 80 billion naira. According to a statement sent to the Nigerian exchange, the proposed transaction will combine the shared goals of both companies and create a more resilient national champion in the Nigerian foods industry, ensuring a long-term job creation and preservation. It further mentions that the proposed business combination is subject to appropriate regulatory approval. Meanwhile, investors have reacted to the news of the acquisition as Honeywell Flour shares rallied yesterday. And Schweppes has launched two classic variants, Schweppes Ginger and Schweppes Zobo, during the launch in Lagos. The managing director of CocaCola, Alfred Olajide, says the Zobo and Ginger variants ride on the back of Schweppes' history, spanning over 250 years. You take a listen.
The ambience, the setup, and the guests at this evening's event is to typify the essence of two variants that Coca-Cola is formally unveiling to the market. Schweppes is launching for the first time anywhere its bold Zobo and Ginger variants, thereby putting a sophisticated spin on two bold yet classical Nigerian flavors. The event, which is attended by industry favorites, including the Schweppes ambassadors Sharon and Mike, are joined by Coca-Cola management to accentuate the uniqueness of the new Zobo and Ginger variants.
We believe in doing business in the right way, and we've gone through a lot of research where, this Zobo and Ginger have been produced from the finest ingredients and with the consumers at the heart. And a lot of these ingredients are locally sourced. And on this basis, we're proud of the quality, the premiumness and the feel, the experience of the brands that we give our consumers.
Ultimately, what we want to do is whatever someone wants to feel when they're drinking something, when they're in a social setting, whether it's alcoholic, whether it's non-alcoholic, we just want to be their friend, right? So we're that friend who has like an immense amount of experience, over 200 years. We know you really well, or at least we think we know you really well.
Building on a 250-year-plus history, Schweppes says it has established itself as a cultural icon in the drinks industry.
One of the best combinations we've done. I'm so proud to be bringing it to the market with the Schweppes team. And honestly, you're in for a treat. Especially throughout Christmas time, you can't pass it.
The perfect thing about Zobo and Ginger is it is us. It is created by us, and now we're taking it not just to Nigeria, but even to beyond.
I genuinely like herbal stuff. Ginger is a fantastic herb if you have like stomach upset and whatever. So if you're on the go and you're working and you're stressed and you genuinely want something that will just soothe your belly, take a kind of Schweppes Ginger. According
to management, the two additional variants means Schweppes continues to straddle the line between the traditional and novel, thereby leaving its reputation as the ultimate mixer.
Quite an interesting combo there. Well, now to our next, first conversation on the program. U.S. Secretary of State Antony Blinken arrived in Nigeria on Thursday and met with President Muhammadu Buhari, and discussions range from security, education, trade, and others. Nigeria is the second largest trading partner to the U.S. in Africa, with two-way trade between two of them over $10 billion in 2019. The U.S. is one of the largest foreign investors in Nigeria, with foreign direct investment totaling $5.5 billion in 2019. Well, I have in studio with me Mr. Shola Obadinu, DG, Nigeria America Chamber of Commerce, to discuss issues of trade between both countries. Good to have you on the program, sir.
Thank you very much.
Good morning.
Yeah, good morning.
Yeah, so tell us about the Nigeria-U.S. Chamber of Commerce, and the objectives of your chamber.
Okay. The Nigerian American Chamber of Commerce was actually founded in 1960, the same year Nigeria gained independence. And the objective is simple and straightforward: to foster bilateral trade relations between Nigeria and the United States to facilitate its growth and engender any business-related development, including cultural also, because there is a business element to cultural activities. So that's our mandate, and that's what we are here for.
Yeah, so the chamber is actually about 60 years old.
Yes,
at this point.
Years, yeah.
What achievement would you say this chamber has had, in these 60 years?
Yes, it has helped to project that objective as stated, and it has become a veritable source of information for those that are seeking business ties between Nigerians along that axis. We are an Agua Resource Center, for instance, and we help to give our members capacities when it comes to trading or doing business, whether it's products or services along the Nigerian-American axis.
Okay, so can you paint a picture of what trade relations has been like between these two giants at this point?
In 2019, aggregate total figures was about $10.5 billion actually, with inflows slightly more, by about $320 million. I think our outflows was about $5.1 billion, and the inflows were about $5.4 billion. The only thing is that, the main chunk in dollar terms of our own exports to the U.S. is it has to do with crude oil, while for them it's a diverse products, in fact services inclusive. The non-oil element that we have is so inconsequential, and that's where the concern is in encouraging non-oil exports, adding value to whatever we are taking there. And there are concerns about standards, access to finance, particularly for those that are exporting agri-based products. And that's where we assist in giving these people capacity to improve their packaging capacity, standards, access to finance, and of course, any logistics problems that they might have that may hamper the ability to do business along the axis.
All right. So, looking at, this, the visit, Blinken's visit to Nigeria, and, discussions around trade and security, what would you say were the key takeaways for you?
It's the visit of the Secretary of State is a reassurance visit. It's a confidence-boosting visit, particularly post-COVID. And that's why, if you look at his speech, it started from health-related matters and the assistance that the U.S. government has started to give. He talked about signing a $2.1 billion support fund, and then he started by talking about the climate change, the effect on business, and the willingness of the United States government to assist and support businesses that are focused on green technology, And then, of course, he moved into economic inclusiveness. I spoke about the U.S. ongoing projects along economic lines. He spoke about AGOA, Prosper Africa, and so on. And then he now moved to democracy, the need to deepen democracy in Africa, and he ended with peace and security. All these are very germane issues. And then, lastly, he now mentioned the intention of the U.S. government to convene a U.S. African Leaders Forum to better iron out all these details so that U.S., because the economy does not stand in space. In space, at the bottom of everything is politics. Politics is the foundation for growth. If the politics is not right, you can't get any other thing right. And that's just the reality of life. So if you get the politics right, then you can now work at getting the economics right. And then you can now move to other things like technology and so on. But at the base of everything, if the politics is wrong, everything will be wrong.
All right, then, looking at, trade between both countries, now obviously there have been concern about oil being our main, export to the U.S. So, with all of this, how can Nigeria actually get to a point where we're actually looking at our non-oil, getting more non-oil exports actually to the U.S.?
Well, that's why we are talking about getting the politics right. There has to be a political will to... We have a lot of things. The mining sector is begging for attention, for God's sake. Non-oil mining sector. In economics, there are two primary areas, of course, the mining and the agri sector. And, these are the areas, particularly the agri sector, that has the propensity and the ability to generate jobs in millions. And then the ripple effects that arise from agricultural activities in terms of processing. Because, when you have a market of more than 200 million people who eat every day, for God's sake, and then we keep on importing food items, when we can add value to whatever we have here. We have a significant African population in the US, for instance, who love to eat African foods. But we've got to package and export these things. And it is better for us, in terms of forex earnings, to add value to all these things along the way. So all these people engaging in these activities, they need encouragement in terms of knowledge about packaging, knowledge about standards, access to finance. These are very key variables that these people, they talk about.
But what is your chamber doing to actually make this happen?
Well, we do training. That's why I talk about capacity building, because a huge chunk of our members are in the SME sector. So they benefit from that. And then we attempt to link banks. We bring banks, for instance. I think the last time we had that, we brought a bank, Standard Chartered Bank, to help to talk to SMEs on how to access finance for export, for that specific purpose. But then all these things are also tied to standards and because of acceptability. And of course, there are also infrastructural issues that are tied, and that's why I talk about the political end. For instance, the port, I keep talking about that. There is no reason for us. We have a huge coastal area, a coastal line that comes from Badagry down to Port Harcourt, to Calabar, and so on. There is no reason why we can't have 6 very functional ports. There is no reason why somebody can be doing business in Port Harcourt. All his goods, whether they are coming in, they land in Lagos. He has to take all these trailers and whatever to take them to Port Harcourt. And when he's exporting, the same thing. He brings everything to Lagos. And then when you are exporting, everything you are doing, all your goods are, the logistics has to be planned such that the goods have to get there in acceptable form. So if there are delays at the ports that make it difficult for you to keep to your timelines, then your goods get rejected, and then you lose millions of dollars. So there has to be multi-port accessibility along that coastal line that we had, maybe, on a very conscious level, and then even within Lagos, the 2 ports that we have, the Tinkan and the Papa Port, the accessibility to that place, and then the efficiency at the port is a key issue. Otherwise, if it makes sense for me to import through Cotonou, why should I import through Apapa? And it doesn't make sense for us economically. And that's where even the African Continental Free Trade Agreement will be ineffective.
Yeah, because we still have trade liberalization issues with the AFCFTA.
Yeah, because we've got to compete on quality and price for everything you produce if you are going to do good trade within the African continent. And for you to be able to do that, your infrastructure must be right. The security must be right. These are the things the secretary talked about. Because if you, not all factories cannot be in Lagos, for instance. If you are doing anything in lorry, you need to transport it down to Lagos, and then the driver and your goods, they get kidnapped by the way. All this, they add to the cost of doing business. They add to the worries of
now you have to worry about security.
You have to worry about that, which is normally taken for granted elsewhere. So all those costs, the cost overruns that you incur in trying to ensure security at times, they far outweigh your cost of production if you're into manufacturing. And that's a huge concern.
Right. Looking at the Intra-Africa Trade Fair that just concluded, now looking at the deals that were signed, how do you see, Nigeria in the scheme of things there?
I'll be honest with you. We need to fix our infrastructure to be competitive within Africa. That's just the main fact. If you are not competitive enough, nobody will patronize you based on sentiments alone. They can do it on a one-off. But if you want a sustainable business relationship, you've got to be competitive. And for us to do that, I think the only area in which we are competitive so far, to me, is labor. Our labor costs, they are cheap. But every other thing is either not there or expensive. So I think there has to be a commitment by the government to do something about the security issue. It's very important, so that let people that do business worry about basic business indices and not things they shouldn't worry about.
Exactly. But what should the private sector actually be doing right now? We know what the government should be doing, but how can the private sector actually help make the situation better for them?
The private sector can make advocacy, can raise the advocacy voices. And we try to do that as much as possible. There is this annual economic summit that has become an annual ritual now. Things have to be taken beyond the point of the president or his representative just coming in, making an opening speech and walking away, and half of the hall, they follow him out. All this hard work that are put into producing papers for discussion, they have to, people, we are willing to help the government. It's supposed to be a partnership thing. We are not a lower partner. The public and the private sector, they have to be on an equal footing for the benefit of the citizens of this country, for the benefit of those that we need to create jobs for the benefit of our incoming generation. The reasons why people run away to these advanced countries is because they are providing for the next generation. When are we going to get to the point where we'll be providing for the next generation? Right now, we are not doing that. We are eating up everything, and that is a sad story.
Quite sad. But what advice would you have for, take for instance, an exporter now looking to actually have their products actually exported to the U.S.? What advice would you have for that person right now?
Okay, now you've got to go through some process because you've got to find a buyer, and then, for a first timer, there are challenges because whoever is going to take your orders has to have some comfort in your past history, and that's a bit of an issue. But however, you might be lucky to get a small order to start. Somebody might be willing to try you out. But you've got to now make that commitment work. The discipline to keep to agreements. When you have an agreement with any organization to supply A or B, be it goods or services, you have to. It's a biblical thing. It's not. You can't say, "I'm sorry." For a first timer, this is the reason why I cannot. You are automatically knocked out. And not just that, you are going to lose money. And that's why you've got to be sure of what you do. Maybe the best way to start is to make sure that whatever you want to take out, you have perfected it inside. You have a local market first. And that will give you the initial confidence to reach out to supply outside.
Okay. All right. So the year is almost over. Looking forward now, what's your outlook for Nigeria-U.S. trade relations actually going forward, briefly?
Yes, we hope for better days ahead. The 2020 was a slump because the 10.5 aggregate trade volume in 2019 dropped to about 4.5 in 2020. But the figures we have up to the end of September is suggesting that we have reached the $5.5 billion aggregate figure, which means things are picking up. So the U.S. is a critical trade partner to Nigeria, just as we are also to them. But, we've got to believe in that relationship. And I think we have so much potentials ahead. The U.S. is willing to support the existing agreements that are in place, the AGUA, the Prosper Africa, and now they are even key into the African Continental Free Trade Agreement. So there are better days ahead.
Better days ahead. All right, Mr. Badunu, we'll have to leave it there. Mr. Shola Badunu is the DG, Nigerian America Chamber of Commerce. Thank you for coming.
Thank you very
on
much,
Business
Ladi.
Morning. All right, after the break, commodities market update is next. Do stay with us. This is Business Morning.
This is
Welcome back. Still watching Business Morning for commodities market update. Now, we see oil prices drop today, reversing gains in the previous session. U.S. West Texas Intermediate crude futures fell 43 cents to about $76.32 a barrel. We see Brent crude futures fell about 30 cents to $79.40 a barrel. All right, now we have Anosike Nwajide, research analyst, financial derivatives company, breaking it down for us. Great to have you on the program. Good morning.
Always my pleasure.
Yeah, so we've seen our oil prices lose the $80 mark, down about 8% in the last month. Shall we say the oil bull market is over now?
It remains to be seen. I mean, remains uncertain. The U.S. and China have taken or deliberating on taking drastic steps to curb further rises in prices. I mean, the U.S. president approached OPEC sometime earlier this month, saying, asking if it could say increase the pace of its output expansion to curb the rise in oil prices. And OPEC gave an emphatic no that we will do what is in our best interests. And we've seen oil prices, we saw oil prices rise to about 85, 86 after that. So the U.S., its strategic oil reserve, China has a strategic reserve as well. The U.S., its size is about 600 million barrels somewhere in Texas and Louisiana. So for times like this, it's typically an emergency measure. But with gasoline prices rising in the U.S. in some states to about $5 a gallon, that's really steep, and it's fueling inflation. The biggest worry in the U.S. now, inflation is at a 30-year high, and they were initially thinking inflation was more transient.
That word keeps going around.
But it's seeming to be structural. We saw fiscal stimulus about 15% of GDP. We saw lending rates come down to zero. The Fed took action to make sure lending rates fell to around zero. So you're seeing that influx of money into the U.S. economy, and you have supply chain disruptions and high oil prices, which given inflation is now 6.2% thereabouts. So the U.S. is trying to align with China to see how they can pump more oil into the market and lower oil prices, which would translate to lower gasoline prices. So in the fact that they are actually, I mean, it's rare to see the U.S. and China align on anything.
Yeah, that's quite rare.
So that's how important it is. So the market will wait and see, and then again, how much oil output do we expect from this alliance, so to speak? How much oil output? How long will it last? I mean, if you have 600 million barrels of oil, how much does China have? So it remains to be seen, but obviously it's going to have some impact on the market in the near term. I see oil prices fall even lower to back. I mean, when it was at 70, we're thinking, oh, this is a high of about 2-3 years, but 80 was really steep. So oil prices may fall to just about $70 a barrel in the next month. We might see oil about $70 a barrel.
I was expecting at least $90 by now, but now we see the U.S. trying to reduce the price, and we see OPEC actually resisting that. Where do you see this going?
I think by the next OPEC Plus meeting, it remains to be seen if the U.S. and China would have taken action by then, and OPEC might respond and begin to. I mean, it pumps an extra 400,000 barrels of oil a month. It might take action and say, okay, let's lower that. Let's see where we can strike a balance and keep oil prices between $70 and $75 a barrel. And because, I mean, the fate of the economies depend upon it. Most of them are oil dependent, especially countries like Nigeria. So I think OPEC will be forced to take drastic measures in itself. But for the US and China trying to bring down inflation, they will do what they have to do, which is it's just a threat of putting out oil from their strategic oil reserves, even to driving oil prices down. Imagine if it's actually done. So we'll see oil prices between 70 and 75 in the next couple of weeks.
All right, looking at this special petroleum reserves now, what kind of impact can we expect from it? Would it be a short-term or a long-term kind of impact?
Given the size of the U.S. reserve, 600 million barrels, I mean, if you release an extra 1 million a day, it would take about 2 years. We don't see that. Typically, the reserve is for emergency measures. So if you act and OPEC reacts and all the other countries react, there comes a time there will be a balance. Then as demand improves in the coming, as you know, there's a global recovery taking place as demand improves, and there's a supply glut, obviously. The supply glut coming because of the strategic reserve, and as OPEC continues to increase output, unless OPEC decides that it's no longer increasing, then we can say, okay, so that much supply is going to be taken, or that much expected supply into the market is going to be not going to happen. Then there's the case of Iran, that's in talks with the U.S. and the possibility of the Iranian nuclear deal taking place. So they would obviously want to put back maybe over a million barrels of oil per day. So it's looking more and more like oil prices, supply outwitting or outpacing demand in the coming quarter. And oil prices getting probably below 70. It's a possibility.
No, definitely weigh on price. But I would say the prospect of national lockdowns in Europe, that has also raised concerns about the economic and oil demand growth. How will this all play out?
Well, as the economic recovery takes place in Europe, we're seeing there's a possibility of lockdowns in countries like Germany. We don't know if it's an entire lockdown or strategic, specific, location-specific lockdowns. I mean, that remains to be seen because it's a new variant of COVID. We don't know if the vaccines, the level of efficacy of the vaccines we already have on that variant. So it remains to be seen. I mean, if people take vaccines and there's a booster shots, we don't know how quickly this variant will spread across Europe. We don't know if it will spread. So the markets will wait to see and anticipate any damage to potential demand, to the demand outlook, and that would weigh on what oil prices will become in the next couple of weeks. I mean, it's rising faster than the pace of increase is faster than the previous variants. So in the next couple of weeks, I mean, if it rises to neighboring countries or spreads to neighboring countries, it becomes a problem. And it weighs on potential outputs in the future, potential demand in the future. And that would really tell on oil prices in the coming weeks.
Lockdown actually have an incredible impact on prices there. But we see IMF in its Article 4 missions called for complete removal of regressive fuel and electricity subsidies. How do you see the government reacting to this?
I think because we've seen higher oil prices, and higher oil prices for us typically amounts to higher subsidy payments. If you want to keep oil prices at 162, if you don't want to deregulate the price of fuel, and if you did that, the price of fuel will probably rise to close to 400 naira per litre. And obviously, that will come with the consequences of inflation and all whatnot and increased poverty. But it's something that needs to happen. If you want to attract investment to the downstream sector, if you want to bring efficiency downstream sector and take out the subsidy creates an avenue for corruption and smuggling. Over time, this is what has happened. We've seen people being able to take fuel across the border and sell at deregulated prices in neighboring countries. So if you want to remove that opportunity for arbitrage, you need to deregulate the market. You need to move subsidies on fuel, subsidies on even power. If you want to attract investment in the sector, cost-reflected tariffs are important. And for efficiency, private sector participation, jobs, you need to take away those subsidies that have been in place for a very long time. Obviously, we expect some resistance from labor, even civil society, even people, because of the higher prices. But we feel like eventually it will help government, the fiscal consolidation efforts. Especially with fuel subsidy, that takes close to, this year alone, it amounts over 1 trillion naira in subsidy payments. So you take away that should add to the federal government's capital spending, maybe on roads, rail, things that will improve the lives of people, could improve competitiveness and the ease of doing business, which will attract investment. So yeah, that's...
Well, we're talking about subsidy removal for the longest time now. Mm-hmm. When do you see this happening realistically?
Well, the federal government has set a date of mid-2022. We think it will happen earlier. It was just announced this morning that the government wants to share about 18 billion naira to every state in the country. That's basically the increase in FAC from the anticipated removal of subsidy being shared ahead of the actual earnings. That's basically what's taking place. So we think that, I mean, the fact that this has been announced now, it might happen way before the ending of June 2022, maybe as early as January.
So this is like a loan.
It's like a loan. It's like a promissory note to go spend the money in anticipation for the increase in FAC in the future. So that's something we think is going to happen. It has to happen. It just has to happen. Slowly, we've seen the they've been slow. The reforms have been slow and gradual, but it's heading towards where we know that this has to be taken away. We have a PIA that was passed, and one of the stipulations of the PIA is the deregulation the regulation of the downstream petroleum industry, which subsidy removal is the critical thing that has to be done. If you remove subsidy payments, then you have a deregulated market where it's price reflective, where price is determined by demand and supply. So that needs to happen now and put more money in the hands of government. Obviously, there's a trust deficit. People don't exactly trust the government to spend the money judiciously, but the government needs to be seen to be spending money, targeted areas where people would benefit the most. Transport infrastructure, especially road, rail, even the ports. We know how difficult it is to get goods from the ports to markets or wherever, different places in the country. So if you can be seen to be targeting spending where you solve a problem and people are seeing that the problem is solved, I mean, that trust deficit could be bridged.
Right. Anyway, MPC, we're getting the outcome meeting today. Any sound bites? What are the expectations?
It would be surprising if there were any change, anything other than maintaining status quo. I mean, we're seeing a positive economic data in growth and in inflation for the 7th consecutive month, even if it feels like prices are surging upwards. But it's on base effects, basically, base effects. But that's waning. Over time, the base effects would wane completely, and we might see. So there's that risk that inflation may begin to reverse the trend. Obviously, there's the external risk as well, given that the central banks in advanced economies may begin to raise, some are already raising interest rates, and the US Fed may raise interest rates earlier than expected. And if that happens, we may see currency volatility in emerging markets. We may see emerging markets, just like Nigeria, might now have currency pressures forcing the CBN's hand. Inflation might begin to spike, and the CBN might need to raise interest rates, which would even further fuel inflation. So it's a lot of things hang in the balance at this time, but all in all, we see even there are risks to growth at this point. I mean, the GDP data was positive, but we saw oil sector and agri sector. Oil sector contracted, agri sector slowed. So these are things that the CBN will be watching out for over time. So we expect that there will be no change in any of the parameters in this meeting.
About do you expect anything about e-naira?
The e-naira, yeah. I think in time the CBN and the federal government would come up with policies to they might want to make payments or disbursements, and people might be compelled to adopt the e-naira or the wallets as, we're going to make this payment and it's going to be via e-naira. So you better get it or you will not get paid. Those sort of policies, and that's what will compel people to adopt the e-naira, because I think there's, like I said, the trust deficit. People may not want. A lot of people live in fear, constant fear of the CBN, of the authority, of the government having knowledge of their financial transactions and all whatnot. So,
another fear is if you actually compromise, or if your e-naira wallet is compromised.
Obviously, there's
you bear that risk.
You bear that risk, and the CBN was very clear and categorical about that. So there's anything you do online, there's the cyber security risk. So, and if you're told that, look, it's all we have no fault in this, the risk is all on you. So Nigerians might be very reluctant to adopt it. But all in all, I think the CBN would come up with policies to compel people.
Right. Anyway, another burning issue now, we see Nigeria is looking to lure foreigners into the mining sector. What's the plan there?
It's all part of the diversification drive. I mean, the mining sector is a sector that can absorb a lot of labor. It's capital intensive, a lot of equipment required. So it's something that's, given that Nigeria has over 50 50 different types of minerals across the country. So it's something that can absorb a lot of labor, lower unemployment, help in earning forex. I mean, even if you don't use up the minerals here, you can export them. We have gold, we have cobalt, which is huge in renewable electric vehicles, for instance, and even a lot of in technology, in making phones and all whatnot. So it's huge. Nigeria has huge cobalt deposits. So it's something. It's long overdue that you give incentives to foreign investors in form of import duty waivers and even tax 3 to 5 year tax waivers. So you attract investments. Nigeria just needs to become more competitive. So what are other countries doing to attract investments? This time that we have the African Continental Free Trade Agreement coming to play. So how do you attract investments as opposed to, okay, I want to invest here. I can go to Ghana or any other country. Why should I come to you? So you attract them. We have problems around insecurity, infrastructure, but if you can give them some incentive via tax, lower import duties and all of that, it would go a long way in attracting foreign direct investment.
All right, we've seen the price of cooking gas spike. Now diesel prices are also on the rise. What's stoking that?
Diesel obviously is the rise in international price of crude oil. Diesel is one of the derivatives. Even there's a global energy crunch at the moment, so that's playing on the price of gas. And like I said, the CBN is keeping an eye on things that could stoke inflation. One of them is cost of energy, cost of gas, cost of diesel. So that risk is high. It's high and it's clear and present, so to speak. So they'll keep an eye on it. Obviously higher diesel costs will fuel higher logistics costs, fueling into inflation as people a ripple effect. So that's something the CBN will keep an eye on. It's going to continue. It's just the truth is, in most parts of the world, in every part of the world where there is a deregulated market for the derivatives of petroleum products, fuel prices are higher. Petrol prices are higher than diesel prices. So it just gives an idea of what will happen when we take away subsidy and the market determines the price of fuel. We'll see fuel prices close to 400 naira. Diesel, it's about 340. It's surged about 340 in the past 2-3 months from about just under 300. So when the prices are determined by demand and supply, we will be at the mercy of markets, so to speak, and with no intervention. So it's something we will need to get used to.
All right. So looking at the domestic commodities update market now, can you tell us what's actually happening there?
Okay,
quickly though.
We were seeing the impact of the harvest season fade off or fade away. In the next couple of weeks, as people begin to plan towards Christmas, increase the buying of commodities, we'll see commodity prices. So we're seeing the price of goods like rice, pepper, tomatoes. They've been falling. We expect those to reverse. We expect the trend to reverse in the coming weeks as people begin to double down on Christmas expenses. So that's basically
all right. It's going to be a very interesting Christmas, Nosike, I must say. Anyway, we'll have to leave it there. Nosike Nwajide, research analyst, financial derivatives company. Thank you for coming on the program.
Always my pleasure.
All right, we'll take a moment now. When we come back, we head to the markets. Do stay with us. Welcome back. You're still watching Business Morning live on Channels Television. Now, for an opening call to the market, we have Willie Bong. Will was green yesterday.
Yes, Laddie. Yesterday was fantastic open to the markets. Trading activities began positively, and this was driven by investors' demand for first BN Holdings, O&O, Honeywell Flour Mills, and we also saw what happened with Honeywell Flour Mills and Flour Mills. That interesting acquisition, 71.6% stake in Honeywell. That's going to make Flour Mills like larger. I'm going to see how bigger they're going to get, and we're going to see what impact and implication that is going to have for the market. You know, basically it's mind-blowing. It's quite big, you know, but this, I don't know, this is going to change probably the food industry, the FCMG, the fast consumer goods that we see in the country. So we see that the all-share index increased by 0.14% to 43,360.13 points, and we see that the month-to-date and the year-to-date gains have increased to 2.9% and 7.4% 2% respectively. This is a great thing for the market because the year-to-date gain has been, if we know from historical, has been on the downside since this year, probably mid this year. It's really been dropping far below, went below 0.1, but right now we are back to a level where we're going to see possibly, like I said earlier, we're going to do a countdown to when we get to the 45,000 level there. And the total volume of trades increased by more than 1,000% yesterday to 2.47 billion units of trade transacted and valued at 16.47 billion naira and exchanging over 4,800 deals. O&O was the most traded stock by volume and value. In fact, the oil and gas industry pulled the highest volume of trade in terms of volume and value yesterday. Sectoral performance was also mixed. We saw oil and gas up 1.27%. It was really good. Banking was also great. Consumer industrial goods, not so great. And the insurance sector was also pulling its weight there. But we have to give us more insights about the market. We have Rotimi Fakayoja, is a stockbroker at the NGS. Good morning, Rotimi. Hello, Rotimi, are you there?
Hello.
Hi, good morning, Rotimi. It's good to have you this morning. Can you hear me, Rotimi? Can you hear me, Rotimi?
Yeah, I can hear you.
Okay, great. Now, we see that the market, the equities market, made a positive return, made a return to a positive territory in yesterday's trading session. Now, can this positive trend be sustained this week, or will we be seeing more profit-taking?
Well, I don't see any profit-taking this week because we haven't had a... the week before wasn't that bullish, and there is really no position to redress. So in that way, I don't really foresee a bullish, a profit taking this week. I think the week having started on a positive note, there is a likelihood that may continue, although it may not be for every other day. But I believe that the outcome of the end of the week may still remain positive.
Okay, we also saw yesterday something fantastic. Well, it was a big move that happened yesterday. I was talking about it earlier. Flour mills, Nigeria acquiring 71.69% majority stake in Honeywell flour mills. What are the implications for the market?
Well, I think the first thing is we have two quality equities listed on the exchange in the names of flour mill and Honeywell flour. Two of them in the same sector. And that means if one is, as flour mill will be acquiring Honeywell flour, that means the market is being depleted of one good stock listed on the exchange. So that means the overall effect for that in terms of the number of listed equities is going to reduce by one. Now, secondly, I think it portends a good trend and outlook for the shareholders of flour mills, because the sector that they play in is actually more of they've really dominated that sector before, except for some competition coming from former Dangote flour, which is now Olam, and also Honeywell flour. So if they are taking up Honeywell now, as they will be doing, maybe barring regulatory approvals, then in that wise, that means they're going to have a larger market share and also be able to turn out better returns for their investors. And I think with that enlarged portfolio which they're handling and also enlarged market share, I also want to believe that the future for flour mills is definitely going to be much better than what we are seeing presently. So investors who actually were dilly-dally about holding on to what they have, I believe strongly even now may be the time to actually get more. And the implication of that also is that we're going to have an enlarged market capitalization for the stock, because with the enlarged portfolio and the enlarged balance sheet, it's definitely going to turn out being that the price of the share, the share price of flour mills is going to be better than what we are seeing right now. So I think investors really have it good. And for us to be having this kind of business combination in the market, it actually shows a lot of transparency within the system. And I believe that the regulatory authorities will be able to handle this as quickly as possible so that it can be concluded very fast.
Okay, so are we going to be seeing more of this kind of acquisitions in the market, maybe two companies of the same products coming together to boost maybe their share price or their capital in the market? Do you foresee more acquisitions maybe in the capital market?
Well, all over the world, acquisition, merger, and is in thing right now. So with this kind of business combination, we are definitely going to be seeing more of that. It may not really be, we may not see it in the same sector, but definitely we are going to see it in several other sectors. And even for some that both are not listed on the exchange, we've seen the likes of Boa Cement coming to the market, having acquired other entities in order to become a better player in the market. And we've also seen presently, FO acquire, Adova PLC acquiring Enyo. Though Enyo is not listed, but that also means a better business, a better balance sheet for the two of them. So I believe strongly that we're going to have more of this, and it's going to be better for the market.
Okay, so we saw that the stocks of Honeywell flour rallied almost 10% in the market yesterday, but we saw nothing, no price movement for the share price of flour mill. Why is that? It's quite surprising, especially I thought that flour mill would be rallying in the market yesterday as against Honeywell flour. Both of them rallying at the same time, but we only saw Honeywell flour rallying, investors being interested in the stocks of Honeywell flour. So why is that?
Okay, I think for design investors, they may not really take a rush at getting more of flour mills because the terms of the acquisition needs to be made public. How many shares of Honeywell flour will be exchanging for, or at what price are they going to do the acquisition? So all those things are not yet clear yet. So designing investors may not really go into a rush and start acquiring more of those shares. But I think for what we saw in Honeywell flour, I think it is more of the activities of speculators. They are thinking maybe it's going to be as what we have seen in terms of Dangote flour when in those days when Holland was acquiring, that we saw an enhanced share price prior to the listing of the stock. So maybe it's that speculation that is making people to actually go into getting more of Honeywell flour, which actually made the stock to rally yesterday.
Oh, thank you so much, Rotimi, for that insight. And I'm sure that the viewers are happy to know what they should look out for and other insights or notes they should take before they start buying maybe the stocks or things they should look out for in the market. Thank you so much.
You're welcome.
So we're going to quickly go to the fixed income market where the bond market opened yesterday on a very quiet note, and given the weak investor appetite for bonds in the secondary market these days, we've witnessed the market improved offers across the board. Market players sought to take profits, especially on the mispriced bonds across the curve. In addition, analysts witnessed there was a bit more of supply on the short-tenured bonds on the papers. That's the 2023 paper and the 2025 paper, which is not on the board there. But overall yields remained unchanged from opening levels, and analysts expect a similar trend today as we await the outcome of the MPC meeting. So the Treasury bills markets also, same thing, quiet note, and we see that market participants are largely waiting on the sidelines, and we'll see the outcome of the MPC meeting today, Ladi, is going to determine what investors are going to be pricing on.
All right, well, I guess it's mergers and acquisition season. We'll keep tracking how that goes and see if we can even get a green close today. All right, Will, thank you so much.
Yeah.
All right, let's take a look at the crypto market. Now, we see Bitcoin retested the 55,500 support zone against the US dollar. Bitcoin is recovering, but it could face strong selling interest near the 57,500 range in the near term. Let's take a look at the market cap there. We see it's about $2.54 trillion. It's down 0.63%. 24-hour volume traded 4.22%. Bitcoin dominance, 41.82%. Look at the price of Bitcoin there. We see $56,433, down 2%. Volume traded there was about $35.05 billion. So we see there's a lot of selling pressure happening right there. Let's bring in Rume Ofi now, digital market analyst. Great to have you, Rume.
Good morning, Laddie. It's my pleasure to be around.
Thanks, Gourmet. Well, we see Australia's largest retail bank, Commonwealth, saying it's more risky not participating in the Bitcoin ecosystem. Why are they saying this?
The Commonwealth Bank of Australia, CDA, their CEO, actually, Mark Coney, actually says that the bank is more concerned about the risk of missing out. Why? Because a lot of people get this whole thing wrongly is trying to focus more on the price. This is an asset of just 13 years and has done about 3 trillion, and it's going to do a whole lot. So this is the first bank amongst the big banks in Australia that has actually done this, and actually announced earlier in November 3rd that it will support 10 digital assets, this Bitcoin and others, in its banking app. But I like something that actually is going on in this. He said in his word, because I actually watched him on Bloomberg. He said, we see risk in participating, right? But we see more bigger risk in not participating, which means that everyone needs to understand that why this asset is volatile and is really speculative. So what we need to also do is not put a blind eye to this sector, because it's going to be really massive in the shortest period of time. And also, the Australia Security and Investment Commission is coming to say that, we shouldn't put the citizens over there shouldn't put all their eggs in one basket. When being asked what the way forward or around this Australia, I think Australia just did this financial review and wealth summit November 22. So the chairman actually said, be very careful. We're coming up with regulations, and though it is not in our jurisdiction to do so, but they have actually put around policies, their exchange-traded funds. So the Senate is working on something to make the financial ecosystem there to be healthy using crypto and digital assets. And I think Africans should learn from that. And I believe it's none of these idea of being hostile to those involved in digital asset transactions. So if there's a laid down rule, everyone is going to follow it in a way whereby it becomes a win-win, like what the vice president of the country said, that we will not gain more from stifling technology, most especially blockchain and cryptocurrency innovations.
Quite interesting. Risky to participate and risky to stay out of it. All right, Rumi, thank you so much. Enjoy the rest of your day.
Thank you very much, Laddie.
All right, and that's the show today. Thank you so much for watching Business Morning. Do remember to join us for our special MPC coverage by 1:30 p.m. today. That's at Business Incorporated. Thank you so much for watching, and enjoy the rest of your day.